Do not catch a falling knife. Do not trade against the trend, they say. However, pullbacks or counter trends are profitable trading opportunities if you know how to trade them correctly. In this video, I will review 5 major tips and strategies to trade counter trends with confidence and maximize profit, which includes how to identify high probability counter trend entries. So if I were you, I would watch this video to the end to learn how to identify and act on counter trend opportunities. Also, use the link in the description to join my Telegram community where I share free winning signals. Guys, all my signals are completely free. Please avoid falling for scammers. Moving on, let's head to the chart. Here on the chart, let's start with the basics. What is a pullback? Pullback, as you all know, is a temporary pause or retracement in the direction of the trend before the price resumes its original movement. For example, if we have a bearish trend like this, I can see that the pullbacks here are counter trend price movement that provides an opportunity for you to sell right around these zones in the direction of the bearish trend, a more favorable price. However, that's not the main focus of this video. Instead, we'll explore how to identify and take advantage of pullback opportunities. So there is a common misconception that trading pullbacks or counter trends overly risk when compared to catching a falling knife, where you risk getting hurt or trapped in your trade. However, when approached correctly, pullbacks can present excellent trading opportunities. Now let's proceed into how you can trade pullbacks effectively, okay? Now to trade pullbacks successfully, it's important to recognize shift market momentum that confirm the pullback phase. You know, for example, if we have a bullish trend in this scenario, okay, the market does not just start retracing, or just continue buying in that progression. We always have price behaviors that signals that this pullback is about in, alright. Then we also have price behaviors that signals resumption of the continuation phase. Okay, so it's important for you to pay attention to these price behaviors. Key price behavior that signals this shift in momentum is internal change of character, also known as the shift in market sentiment from bullish to bearish or from bearish to bullish. Okay, then alongside with higher time frame momentum candles moving in the opposite direction. So these are key behaviors that you need to look out for when trading pullbacks. Basically, these behaviors signal that the market is transitioning from a continuation phase into a pullback phase. So quickly, let's break down the steps. Okay, as you all know, I like to start my analysis from my higher time frame before I scale down to the lower time frame. So the first step to trade pullback successfully is to identify your trend, and you do this on your higher time. As you can see on the chart, this trend is bullish, okay, because price is making new highs, right, creating higher highs in that progression. So as you can see, I'm recording this video on the weekend, so there is no price movement right here. After identifying the trend, you need to clearly identify the phase of the trend, okay, or the phase of the recent price movement or zone that you are about to trade. As you can see, we have impulse, we have period of consolidation, we have another impulse, we have correction, impulse, correction, impulse, correction, impulse, and then we have another correction phase right there. It's very important to highlight the phase that you are trading, because you do not want to trade pullbacks when the trend just resumed its continuation phase. So having identified the trend direction on our higher time frame and the phase, then we'll go ahead to map our higher time frame structures and identify our key targets. Guys, identifying key targets is very important because it helps you stay guided when trading pullbacks, okay? So since this video is about pullbacks, we are going to take a look at a critical example here on the higher time frame. Clearly, we can see that we have a break of this high, right? This is an impulsive move, and then we have the pullback around this zone. So let me show you a step-by-step process on how to trade this counter trend profitably. So looking at the price chart, how would you have been able to get an entry opportunity here or maximize profit from this pullback? Let's be more realistic here. Okay, so I'm going to cut this zone out so that we can take real life example of this trading. So let's see how we can clearly identify these pullbacks based on our higher time, right? First step, to identify price behaviors. Look out for price behavior. This is a very important concept. So after the break of P zone, right, it's major high, major low, we always anticipate a pullback, period of rest, okay, from the rally. So moving on here, there is no clear indication based on this price behavior that the market is about to make retracement. So in this case, we do not have any valid reason to embark on any counter trading opportunity. Assuming this is our chart in real time, okay, let's take a look at how to approach effectively. All right, so I'm going to play price forward. This is where your patience come into play. Assuming you're still on this trade, you're observing your higher time frame alongside with your lower time frame. So let's play price forward and see how we could get a signal for price behavior that will indicate a shift in market momentum. Okay, so guys, as you can clearly see on the chart, you can see that there is a probability that bears are stepping into the market. Okay, why? Because can clearly see a price behavior here. So this is an inverted hammer right here, okay, signaling selling interest around this zone. But we need a confirmation to indicate that sellers are actually active around this our supply zone. So guys, this is one of the price behaviors you need to look out for. Candlestick patterns are powerful indicators of shifts in market momentum. So you need to pay attention not just to be able to identify them, but to also know how to read and identify their significance on the chart. So with respect to this behavior, we need a confirmation indicating that there is clearly a significant selling interest in the market and not just a pump in price by the market makers. So moving on here, let's play price one more time to see if there is a valid confirmation around this zone. So as you can see, the next candle has low volume. Okay, there's also an inside back to this dark candle. So there's still no bearish confirmation on that note. You need to be patient to wait for a confirmation right here. Okay guys, as you can see, we have a massive gap down around here. This price may likely fill this gap and then push lower, or price may also fill this gap and then break previous high. So we need a valid confirmation for we confirm the counter trend or pullback phase. So on that note, I'm going to play price one more time to validate this signal. Alright, so with this price behavior, we can clearly see that price has confirmed this. There's enough sell momentum to push price lower in the market. So this strong bearish sentiment here indicates price may not push higher as we anticipated, that the bears are interested to push the price lower, just like I said. Alright, so having identified this strong selling presence in the market, this has met one of our conditions, trade pullbacks. Okay, remember I said you need to identify your standard change of character or momentum counter candlesticks signaling buying or selling interest as the case may be. So in this case, we have a signal here and then we have a confirmation. So we would not just trade pullbacks blindly. After identifying the signal, to what extent do we intend to trade the pullback? Remember, this is actually a falling knife and we do not want to have a serious injury while trying to grasp this knife. Alright, so on that note, we need to identify our target, and this is where your structure mapping comes to play. So you need to have a detailed structure mapping that will highlight a liquidity zone and target where price may likely react from. So probably before you engage in this buying opportunity in the direction of the trend, you would have had your structures, mapped out around these zones. Okay, but because the chart is naked, we do not have any structure mapped out for now. So let's quickly break down the chart to enable us get our targets and key zones which price may likely react from and resume the bullish trend. Alright, right here, like I previously highlighted, this is our break of structure zone. Here we have our BOS. And why is this our BOS? Because we have first liquidity points here which was taken out. Okay, our first liquidity points, also known as our inducement zone, which has been taken out. And after this, we have our break of structure. So looking left, where is our POY, where price likely reacted from before resuming the bullish trend. Okay, you can see that we have a valid POY right here, right? We have an order flow, then we also have an order block around this zone. So why is this a valid order block? Because you can clearly see that it swept the low of this candle, validating this a valid order block with clear imbalance and liquidity pool around here. Okay, so on that note, remember, like I said, when you're trading pullback, this is a pullback. Okay, you need to identify your target, right? And these have to come with a detailed structure mapping. Okay, so now moving on. So this was where our previous pullback and counter trend trade reacted from. Okay, before the break of our major structure high, as you can see. Alright, after the break of the major high, which is our break of structure zone, this validates this low, our major low, which is also a change of character right there. So this is our major low and our change of character right here. So this will guide us in choosing our key targets within the bullish structure. So having identified our change of character, So the next is to identify our liquidity points, our valid POIs, so that we can maximize this counter trend opportunity back to our key target, which is any POI or liquidity pool that we identify. So as you can see, our first liquidity point is this zone right here, okay, known as our inducement zone. Then where is our valid POI? We have an unmitigated order block around zone, okay, right here. So this has given us insights on our target. As you can see, everything around here, okay, has been mitigated. We are not expecting to highlight any POI below our chalk zone, right? It is incorrect. Okay, this is an advanced thing. But moving on, meaning that if price closes below our chalk zone right here, okay, we have a move like this, it means that we are now bearish. So we do not need to identify any bullish POI beyond our chalk zone. Having identified our structures, with this information indicates that our key target should be anywhere around this zone, okay, and should not exceed this zone. So this is the importance of breaking down your higher time frame to give you an insight when you are defining your entries. So like I said previously, it's very important to highlight your target zones so that you do not get caught up when the trend actually decides to resume. So we have a bearish sentiment indicating selling interest, we have a liquidity point, and we have identified our target. That note, we can now scale down to our lower time frame to look out for entry opportunities to trade the counter trend profitably. So let's switch to the 15-minute time frame, which is in this case my lower time frame. So here also in the 15-minute time frame, remember the price is fractal, okay? So we need to also break down our 15-minute time frame structures to enable us trade this counter trend back to our target profitably. So on the 15-minute time frame, right, we also need to look out for the price behavior that signals reversal. It's like we identified on the higher time frame. As you can see, we have a break of this high, right? This is our higher time frame break of structure zone. Have a break, and then we have pullback here. We have another pullback, have a break of this high. So in this is our first liquidity zone in our bullish swing, lower time frame bullish swing here. Okay. So having identified this is our first liquidity point. We're expecting price to take our liquidity from here and then push higher to break this high. But what happened? We see price reacts from our liquidity point, and then we have a flip back into this zone. So this becomes our internal change of character zone, validating bearish sentiment to continue our counter trend trading. Change of character is a very powerful price behavior that you should integrate in your trading approach. If you do not have a proper understanding of this concept, you can check out my videos this channel to gain clarity, change factor, and especially internal change of character. So moving on, let's quickly mark out the structures. Since we have identified a change of character zone, okay, we need to identify our liquidity zone to validate our bearish sentiment. Okay, so right here I have a valid change of character here. So we have a gap down here. The candlestick is not visible, right? Okay. So clearly you can see that we have a lower low, and then we have another lower low, we have another lower low, and another lower low in that progression. So in that case, this indicates bearish sentiment. So having identified our change of character, having identified our bearish sentiment, next thing is to look out for a liquidity pool, liquidity zone to enable us gain entry to maximize profit in this counter trend trading. Okay, so once everything is in alignment, guys, do not have anything to fear about trading counter trend. This is not an overly risky approach because you're actually trading in direction of your higher time frame. Okay, so your lower time frame and your higher time frame is in alignment. This is also another powerful concept, trading in direction of the trend, right? Even if you are trading in direction of the trend, do not need to trade them blindly. Once you understand how to effectively utilize these concepts, you will make better trade decisions and maximize profit. Moving on, where is our liquidity point? Right here. Okay, so I'll ask you, can you identify the first liquidity point based on our new bearish structure or bearish sentiment? So we have a break of this low. So after this break, this is the high responsible for this break. And then this is our recent pullback, making it our first liquidity point. So after the liquidity sweep here, you can see that price did react from our mitigated wicks around this zone. Okay, so price reacted from here, and what happened? The price needed more liquidity to fuel the sell move right here, and as you can clearly see, you see price push higher to sweep this high around this zone. Okay, so this is our engineered liquidity where price has grabbed more liquidity, okay, from this zone. So after this sweep above, right, you can see that we have a valid break of structure right here, right? So with this information and detailed structure mapping, clearly see that we have a strong selling interest, selling pressure in the market. Okay, so on that note, we can conveniently, confidently, and comfortably trade our counter trend without being trapped or making unnecessary losses, right? We have every reason, everything is in alignment, trade in our counter trend. So let me just quickly highlight this zone, okay, for more clarity. This is our internal change of character, so I'm going to highlight it as I chalk. So moving on, having identified the sweep right here and a valid break of structure, we do not need inducement. Okay, so remember I said the market is dynamic and exhibits different price behaviors. So your ability to spot these behaviors and be flexible to adjusting yourself these behaviors is very important, right? Initially, once there is a break of structure, you identify your liquidity zones and your POI to go long or short. So this would have been our approach right here. After a break of structure, this is our inducement zone around here, right? Then we may probably look at for mitigated POI. But guys, in this case, based on the recent price behavior, this is not valid. Okay, we do not need to approach the market like this. We do not need to approach our entry like this because of this price behavior around here. We already have a sweep. Okay, there is already a sweep, so we do not need liquidity hunt any longer because liquidity has already been hunted around this zone. However, sometimes price may actually still push higher to sweep this zone, but in this case we need to approach the chart this way, and then if the market pushes higher, takes it out this high, then we reposition ourselves for the next market move. But in this case, since liquidity has already been swept from this engineered liquidity pool, then this gives us a high probability entry zone around here, which is our order flow. So we have our order flow here for refinement purpose of our order block. But remember, like I always say, sometimes price will not mitigate your order block or other POIs. Okay, so we pay attention to the order flow. Okay, so in this case, this is a selling opportunity, high probability selling opportunity. All right. So in this case, having identified our entries, and remember your entry determines your target, right? So we are going to look out for our target around this zone. Since you are trading minor structures, we wouldn't be looking at anticipating a huge target zone. Okay, so based on a higher time frame, our target is going to be our unmitigated POI because we are trading counter trend to take out higher time frame liquidity around this zone. So you see, combining higher time frame and lower time frame is very, very important to guide your trading decisions. If you do not know how to go about your top-down analysis or multi-time frame analysis, I also have a video on that this channel. Make sure to watch it to enhance your knowledge and improve your trading skills. Okay, I'll leave the link in the description for easy accessibility. All right, so moving on here, this point I'm now going to employ my short position 2 right here. Okay, so my stop loss is just going to be above the sweep zone, all right, because the liquidity has been taken out, and if I get stopped out, then I can reposition myself based on the market behavior, because at that point in time, now I cannot actually say what the market behavior would look like. Okay, so for now, this is what we are anticipating, and this is our next profit target right here. So we have a risk reward of 1:3, so that is a very good risk reward, and we are counter trend trading, all right, without fear of necessary risk. Okay, so this is how to trade counter trends effectively. Should be in alignment with your higher time frame. Should ensure that you have identified a shift in market momentum to have a proper understanding of the reversal signals that you need to identify. So moving on, I'll go ahead and play price forward. So moving on here, price almost hit our target around this zone. Okay, but price failed to mitigate our POI. But if we look closely here, you can see that price swept our high time frame liquidity zone around here. Here we have a sweep. So on that note, we need extra confirmation before we continue with our sell move. Remember, this is a counter trend and price may reverse at any point in time. So you need to pay keen attention. So if we see another sell opportunity and a confirmation, then we can ride with the trend again back into our unmitigated POI, because the confirmation and the selling opportunity signals that price still wants to have a deeper pullback into this zone. Okay, so moving on here, you need to be very careful around this zone. So since our POI is unmitigated, we can still analyze our structure to get one more selling opportunity to mitigate our POI if price gives us a confirmation. Okay, so let's quickly highlight our structure. After our break of structure here, we have our value change of character zone, right? So it's very important to highlight this zone. Okay, so this change of character, guys, it is a major structure change of character based on our 15-minute, but it is a minor change of character or internal change of character based on our higher time frame. It's very important to understand these concepts and their significance. All right, so here this is our value change of character, enable us identify our sell zones within the sell structure. Okay, so moving on here, where is our next selling opportunity after the liquidity sweep and we have a value break of structure? So our next high probability entry point is our unmitigated order flow here with clear imbalance. Okay, so guys, if you do not understand how we got about this entry opportunity, you can watch my video on pullback entry, powerful entry strategy. It also gives you a high probability entry opportunity. Okay, so on that note, we need to look out for price behavior around our POI here before we go short. So moving on, let's play price forward to see how we could maximize profits from this trade setup. Right here, as you can see, okay, we have price at our POI zone. So guys, like I said previously, understanding price behavior is very important. Now, based on this price behavior here, and this is a 4-hour key zone, alright, which is our liquidity point, we need to pay attention to this POI before we go short, okay, because at this point, price may likely reverse from here because of this zone. As you can see, price has mitigated our lower time frame POI around here. Looking at the momentum candles right here and this price behavior, we do not just enter blindly because price has mitigated our POI. No, need to wait for a confirmation using candlestick patterns like pin bars, engulfing patterns, and so on to confirm that the market is ready to push lower around this zone. Okay, indicating more selling interest and selling pressure around here. So looking at this price behavior, guys, this momentum candles are scary, okay, for you to even start executing your orders just because price mitigated this one. You cannot just start selling. Now, observing the candlestick, you look at the momentum candles right here, and then we have a depletion right here. So this depletion candle here, okay, let me zoom in so that we can see clearly right here, right? So you can see that we have strong momentum candles, and the third one, all right, lacks momentum. So this is a depletion candle. With this, it signals weakness of the bulls, but we need a confirmation indicating the presence of the bears, all right, selling interest around this zone, all right, to confirm that the bears have strength over the bulls in this particular area of interest. So moving on, let's pay price forward to enable us confirm our sell entry or reposition to buy. So as you can see, we have a confirmation signal here, which is a bearish engulfing candle. And then we see the bulls trying to push price high, and then we have a counter from the bears again. So guys, so this is an indication that there is a selling interest around this zone, and we can go in on this trade right here. Okay, so with this, there is a probability that price will likely push lower to mitigate our unmitigated POI. So we'll go ahead and execute our order right here. So where is our stop loss? Okay, so and set our stop loss just above this recent high right here, okay, or to be more conservative and to give your trade a breathing space, you can set it above this recent high right here. So where is our profit target? And our profit target is going to be an unmitigated POI around this zone. Okay, so we have a minimum risk reward of 1:2. So guys, I wanted to highlight this. Okay, when you're trading pullbacks, you need to have a minimum risk to reward ratio of 1:2. Okay, so what I mean is you should not over anticipate your profit, you should not be greedy, you should not set unrealistic targets because the price may react and reverse at any given point. So just like you can see in this setup, okay, we had estimated a risk reward of 1:3 around here, and guess what? Price hit us out a target of 1:2 and then pushed higher again. Okay, so always learn to cut your profit not short, but set a realistic target so that you do not get caught up when the trade wants to actually continue its phase. Okay, so in this case, We have a minimum risk to reward of 1:2. So let's play price forward and see what we've got here. So right here, as you can see, we hit our profit target right here. Okay, so we're able to set realistic targets because we have already highlighted our key targets based on our higher time frame structures. Okay, so with this information, price has mitigated a higher time frame POI. So in this case, to be honest, at this point, I wouldn't want to continue with the sell counter trend trades. Okay, the reason is because even though the market, the lower time frame is bearish, price are mitigated at higher time frame POI, and you all know higher time frame POIs tend to be more stronger than the lower time frame. So there's a probability that price will push higher right after mitigating the higher time frame POI around, and I wouldn't want to cut up trend continuation phase, right, while trading the counter trend. So this is another key point you need to observe while trading counter trend. When price mitigates your higher time frame POI, you need to look out for a confirmation to continue with the counter trend trades. Okay, let's say there's another mitigated POI around here based on our higher time frame. So there is a possibility, the probability the price will push lower right to mitigate this zone. So all we need the confirmation, the validating this POI, then we can go short maybe somewhere around here back into this POI. Sorry for my drawings. Okay, so that's it for that. Now moving on, since price has mitigated our POI, we do not just start buying. Okay, we need a higher time frame confirmation before we start looking out for buying opportunity. But for me, guys, honestly, in this case, I wouldn't be looking out for any more selling opportunities. Obviously, we've been able to bag some profit. So guys, this is how you can actually trade pullbacks profitably without getting hurt or sustaining any serious injury. Okay, so on that note, we are going to scale down now to our 4-hour time frame, right, to see how price reacts at a higher time frame. So let me take this out so that you can see clearly right here. Okay, so here on the 4 hours, guys, you can clearly see that price has swept liquidity from our higher time frame liquidity point here. And then we have a hammer here signaling buying interest. After the POI mitigation, sweep of our liquidity, so we have a recent high here, which is our internal change of character because of the sweep of this zone. Okay, price pushes higher, closes above this zone, then we can scale down to a lower time frame to start looking for high probability buying opportunity. If price pushes lower to any POI around here, then we can go long, continue our buy trend. So guys, it's very important for you to know, like I said previously, that change of character, either minor or major change of character, very important concept in making your trade decisions and carrying out effective technical analysis. There are various internal chalk concepts and chalk behaviors in the market which you need to familiarize yourself with. Here you can watch my video on change of character or take the bold step to sign up for my mentorship program where I share deep insights of the Forex market, hold it by the hand, guide you through the process of profitable Forex trading. So let's quickly highlight our chalk zone right here. Okay, so this is our minor chalk based on our bullish structure. Okay, price has already mitigated our bullish POI here, and then we have a hammer confirmation. But to validate this bullish sentiment, like I said previously, we need a close above, then we can scale down to a lower time frame because we now have a higher time frame confirmation. Remember to always trade the lower time frame in alignment with your higher time frame to get high probability trading opportunity. Or another entry opportunity, guys, is if price creates another bullish confirmation candle around here, okay, confirming the hammer candle here, then you can also scale down to your lower time frame to get buying opportunity. All right, but in this case, remember this is now a minor structure, so your profit target is going to be around this zone because you are yet to confirm the bullish structure based on higher time frame. But once we have a close above the chalk zone here, then you have a high probability entry opportunity because there is a probability that price may just push higher, sweep this zone or mitigate something around here and keep pushing lower. That is why we always need a confirmation validity before executing orders and making our trade decisions. Then identify this zone, I'll go ahead and play price forward. Let's see what we've got right here. Okay guys, you can clearly see, All right. This we see had a massive drop right there, guys. See, this is the importance of patience in the market. Okay, so as you can clearly see here, this is the current market price. Let me end the replay too. Okay, so this is the current market price on the chart. As you can see, price failed to create an internal choke here, validating our bullish sentiment. Okay, rather we see price lower, creating bearish sentiment, breaking this low right here. So this does not mean that we are now bearish. All right, as you can see, price swept a major change of character zone. There was no close below. Okay, so this is still an indication that price may still push higher. All right, so clearly our lower time frame, as you know, is still bearish. All right, so if you were still observing the price on the lower time frame, you likely see more entry opportunities to go short. Okay, but I do not want this video to be too lengthy, so we are gonna wrap it up here. Okay, so finally, guys, if you look closely, you will see that price swept our chalk zone. Okay, still indicating that the bulls still want to push the price higher. And looking, okay, so after this sweep here, we have a minor chalk around this zone right here. And then what happened? Price still swept this low, indicating that the bulls are still strong around this zone, preventing the sellers from pushing the price lower. Okay, so with this information, this becomes our next internal change of character to validate our bullish move. So this is the current price. Once we see price push higher, all right, and then leave this zone, closes above this zone, can scale down to a lower time frame to get a high probability entry opportunity. However, if price pushes lower below this zone, okay, you see a close below this zone like this, all right, then we have a confirmation of a change of trend, right? This implies that our major trend, overall trend, has now switched bearish if the price, pushes lower beyond this one. So this is the current price. Okay, we'll be anticipating to observe price behaviors, really speculate market movements, but we'll pay attention to price behaviors to make our trading decisions. Okay, so on that note, the market closed at the moment, and we will be anticipating price movements and price behavior to make our trading decision once the market opens. All right, so this is how to trade counter trends, pullbacks effectively without exposing yourself to unnecessary risk in the market. So as always, study, practice, and backtest this concept to help you improve your trading skills to maximize profit, be it impulse phase or correction phase.
Thanks for watching. Go and start profiting from pullbacks, guys. I hope you found these tips on trading pullbacks and counter trends helpful. Remember, trading is all about patience, practice, and consistency. If you enjoyed this video, please give it a thumbs up and share it with your fellow traders. And don't forget to subscribe for more insight and strategies to help you master the forex market. If you have any questions or want to see more videos like this, drop a comment below. I'd love to hear from you. Until next time, keep trading smart, and I'll see you in the next video.